Good morning, everyone, and welcome. For those of you I've not met, my name is Ingrid Fenn, and I'm thrilled to have you with us today for what promises to be an insightful and timely conversation on the evolving landscape of corporate real estate and facilities management. Over the past few years, and especially in the last 12 to 18 months, we've seen a fundamental shift in how organizations are approaching their portfolios, workplace strategies, and service delivery models. Cost pressures are intensifying and expectations around workplace experience are rising. And the role of CRE and FM leaders has become increasingly more strategic and also more complex. And I'm really excited because today's discussion brings together some of the most experienced voices in the industry to explore these shifts. Before we dive in, let's hear an introduction from each of our panelists. Liz, can you get us started?
Yeah, absolutely. My name is Liz Hart. I'm the president of leasing at Newmark. Before that, I was a broker in the San Francisco Bay Area for 20 years. So that my experience really is coming up in the industry representing technology companies. And now, as part of Newmark's overall business strategy, I lead how we think about our occupier solutions. So how do we think about the delivery of the end to end from beginning to end using data to drive decisions for our firms?
Hi, everybody. I'm Todd Lickerman. I'm CEO at Cressa, North American tenant representation business in 50 offices across the US. So we're constantly working with and advising occupiers on their occupancy strategy, and whether that be office, industrial, or specialty.
Hey, hello, everybody. Good morning. Steve Quick. I'm the CEO of ISS of the Americas. So ISS is a global facility services business based out of Denmark. We've got about 300 some thousand employees. And so we are working with predominantly occupiers on their facility strategies and their amenities.
And Gordon.
So, see everyone, Gord Hicks, and I am the CEO of BGIS, and BGIS is a global integrated facilities management services company operating in a dozen countries. And we are a top 4 FM organizations around the world, and excited to talk to you today a little bit about what's driving the industry and certainly what our customers are saying about key areas of concern and trends for the industry.
Thank you all for being here today. We're really excited to hear your insights. Over the next hour, we're going to be covering themes that really matter the most right now: how to optimize our portfolios, leverage data, advance sustainability, and reimagine the workplace. And we'll look at how leading organizations are turning challenges into opportunities. To kick us off, we'll start with a broader lens. Steve, you've been with ISS now for, I think, just under a year, but in the industry, of course, for many. What's the biggest shift you've seen in corporate real estate and facilities strategies over the past 12 to 18 months, and how has this impacted your approach as a service provider?
Yeah, thanks, Ingrid. I'll say a couple of things, but let me start with sort of a caveat. I don't think there's one size fits all. So what I'm seeing is still companies that are sort of in different places around their journey, around return to office, around portfolio strategy. So I think it's really hard to kind of depict there's one size fits all. So that's kind of my disclaimer. I think a couple of things that we're seeing. First of all, I think hybrid is here to stay. That seems to be kind of the norm in, again, most of the cases. I think that we do see a slight trend of trying to get people back to the office more frequently, particularly with some of our tech clients I can think of. So that's certainly a trend that's happening. I think there's two other things that are related to that is, of course, we're in the amenities side of the business, but we are seeing more thoughtfulness around sort of the curated experience that employees have when they come back to the office. Everything, it's almost like, and we'll probably talk later, but it's almost secret shopper. Just think about the entire journey. So I think people are being much more mindful about that. And then I think lastly, over the last at least several months, I think there is this uncertainty about what's going to happen to the economy. I don't see people making a lot of decisions there, but there's a lot of planning and thoughtfulness around, if we do dip into a recession or we don't, et cetera. And then obviously people that are affected more directly by the tariffs are having to make some decisions around supply chain and things like that.
Liz, can you expand on that? Are you feeling the same or relating to those comments around uncertainty with your clients?
Well, I think you see, there's a lot of things that you just said that I would echo. I think that the first thing is the COVID reset really gave us an opportunity as an industry to have every single business leader, regardless of what category of real estate they're in, realize the importance of real estate to drive their business strategy, right? And really connect those things in a very solid way. So you can't really answer what the company's real estate solution should be without understanding what the business's outcomes are. Are you trying to grow? Are you trying to shrink? Are you trying to cost optimize? What is the thing that's really driving it? But going into specific industries right now and what we're seeing, we track over 100 million square feet of demand at any given time. And I think it's a really good indicator of understanding how different sectors of the business are thinking about real estate. And what we're seeing is, companies that are in the technology sector, the consumer product goods sector, some that are being impacted by tariffs that are onshoring, having incredible demand and wanting to grow in the United States because they believe that there's a lot of connection to what's going on in their business and being able to be here with our talent in this environment. At the same time, we're seeing other industries where there's quite a bit of contraction, the government being one, right? Where they're kind of contracting and trying to figure out, how do I have footprint optimization? How can I think about my portfolio strategy differently? So I guess the net is that depending on which specific business you're talking about, you're getting a completely different answer. And that's why having a service provider that's really being nimble and thinking about your specific business outcome as you're creating the solution is more important than ever.
Yeah, and Todd, as we expand on that, because I think that's, such a great point that we're really depending on the industry, we're looking at very different strategies, right? And it's so critical to make sure there's alignment with what the business goals and objectives are. And, real estate cost optimization continues to come top of mind pretty consistently across industries, maybe more important to some than others. But how are you advising clients to unlock value in their portfolios without really compromising that experience or the performance levels that you are able to deliver?
Yeah, it's a fascinating time now since COVID. I think value is the key word in what you said. We spent so many years in kind of a cost pressure environment and a low inflation, low price increase environment that cost pressure was king. Since COVID, and whether it be access to talent or access to markets, the kind of formula has changed oftentimes. So you have to start with what is value, right? You may have certain sectors where it's cost takeout is king. You may have others which is speed and access to talent or markets are king. And I think it's very, very important for us as an industry, whether you're inside a company or you're a provider helping companies, to figure out what problem you're trying to solve. And one of the things that we saw, we knew this looming talent war was out there, right? And I didn't think it would come on the back of a recession and COVID. In fact, I thought that would delay it. But it really did, right? With so many people leaving the workforce and so many companies kind of remaking their business model and rethinking about what talent they need. All of a sudden, access to talent became everything, which rose the value of the workplace, right? And again, you're going to talk about hybrid and whatnot, type of workplace changes, but all of a sudden, workplace, if you're in office and knowledge work, that becomes a tool for access to talent and productivity in a way that I think perhaps we talked about before, but it wasn't as visceral throughout the top of companies and decision making. And then on the industrial side, exactly the same thing. I mean, we saw an industrial remake of the distribution side that was kind of generational, hadn't really seen that. And access to markets and access to, it's not just access to markets, but it's access to labor that can man the center that determines whether you can do same day. And it's really a fascinating ecosystem that has come to the fore. So you really have to solve for value. There was a day that you just solve for cost and you can't go wrong. Now you have to solve for value. So you really have to be in tune with what the business has to do, what their imperative is. And then you have to speak the language of how do you measure that? What is that? And it may not be a cost per foot. It may be a cost per supported worker or cost per some kind of output, because that's the way the business is thinking of it. And if you get stuck in the cost out, mentality only, you got pretty well left behind in some of these shifts. So it's a value discussion. I mean, you have to be very straightforward and businesslike around it, but you have to tie into what the business sees as what are they trying to do, what matters, and then how does place or real estate help solve that?
on Todd's comment because it's an interesting one. There's been this saying that we've been saying at Newmark. I'm not sure, Todd, if you're saying the same, which is value per square foot. We talked about cost per square foot, cost per employee, but as an industry, really talking about what is value per square foot and what does that mean in connection to your business outcomes and how you're driving a real estate strategy.
Yeah, I think that's spot on. And value per square foot, like you said, can look different depending on what the outcomes are, depending on what the goals and objectives of the organization are. And you talked a lot about data and different components of data and how that's used to drive those decisions. And Liz, in a recent interview that you gave with Cornet, New York, I think it was, you spoke about how retail interacts with the office and questions like, where are people living? How are people getting to the office? And what role does data now play in shaping smarter, more agile portfolio decisions? And how are mature organizations using data more effectively?
Yeah. Well, I think, the last 2 years, we've probably said the word data more than almost anything else other than talent, right? Because talent are the people that we're still always going to need. They're the people who really understand that data input and help drive the strategy. And like Todd said, talent remains like the, very core of a lot of the things we do that drive business strategy. With that said, the changes in artificial intelligence have given our industry access to so much more complex data than we ever expected before. And I think that one of the trends that I'm really seeing is you used to have really firm data strategy from end to end, from business outcome through facilities management, through transaction management, through every single stage at the corporate services level or at a larger corporate. And I think that kind of information and understanding of how real estate is being driven and having visibility into your data is actually even common for people who have 2 to 5 offices. So that need has just become prolific in our industry. And I don't see that changing anytime soon. And I think it's going to really impact how our teams at Newmark and across the industry approach it. Like your job as an advisor is to understand the business, understand the market, understand the opportunities. But now more than ever, it's also to understand, the very complex data across all of these different categories and work holistically through a single platform solution that's going to allow you to drive that change.
Yes, on the topic of data, but shifting a little bit into the FM environment. So Gordon, smart building technology continues to evolve rapidly, shifting from traditional automation towards more intelligent, integrated, user-centric systems. And what are you seeing in smart building technology and how it is evolving? What innovations are you most excited about, and how are they changing the game for facility services?
First of all, Ingrid, I love the conversation around creating value for customers and ultimately creating value for their shareholders. And I think smart buildings is really unique in the sense that leveraging this technology can do all of the above. Smart buildings, it's been a topic of the industry for many years. And everybody I kind of think of smart buildings on this continuum where some people are just dipping their toe into it, maybe with some new IoT sensors and so on. Others have been at it for many years, leveraging complex energy management systems and building automation systems and across multiple buildings, across multiple countries and so on, bringing information and data into a portal so they can actually do something with that information and make strategic portfolio decisions. We love smart buildings right now because there is so much innovation happening. So we've got IoT sensors, new indoor air quality sensors that ultimately capture real-time radon gas, CO2, particulate matter. And in this evolving industry, in this evolving environment where you've got wildfires and so on, you have to be in a position to gather some of this data so that you can make educated decisions on what kind of air you're going to bring into the spaces that you're occupying. And we're also at a point in time where we've got technologies that antimicrobial filter technologies and combined with this new sensor technology is giving you this opportunity to drive energy efficiency and so on in a different way than it ever existed before. So this idea then of using IAQ to determine how much outside air you're going to bring in and condition into your space versus just simply comparing outdoor air temperature to indoor air temperature is a thing, and it's being unlocked by this concept of smart building technologies and innovative new sensor technologies. That all said, we've embarked on digital twin technologies ourselves. And this is, I think, the newest platform, if you will, for organizations to adopt. And what we love about, again, this particular technology is you've got this opportunity to look at the entire building, not just a line diagram of an HVAC system and so on in a graphic form, but your entire building. And then you're able to test scenarios with that building based on different parameters. So that is exciting and will drive a lot of value. We've got approximately 4,000 buildings now layered into some form of our smart building platform, and we're driving about 15 to 20% energy cost reduction. Of course, that results in achievement of various value drivers for customers, whether that be decarbonization or just simply better financial performance by virtue of driving efficiency within an organization operations. But it also addresses a value driver around risk mitigation. And again, having this digital twin, if you will, understanding how your system and predicting how your systems are going to behave over time, and then being able to proactively make adjustments, whether it may early repairs or replacement, and better asset management decisions. This is all being unlocked by these smart building technologies and platforms.
We're all coming at it from very different perspectives and different functional areas within the value chain of CRE, but the kind of underlying theme that's coming across is it's all about tying back to the value for the client holistically. What are their goals, objectives? How are we meeting those? And to that point, Steve, food services is increasingly playing a critical role in workplace experience and in employee well-being, sustainability goals. As companies are starting to rethink their office footprints, how is the role of food and wellness evolving? And what are you seeing as engagement strategies to promote more return to office?
Yeah, I think it's a couple things. First of all, I think that this whole return to office journey that we've been on, I think that in most cases, food has been underappreciated as to what a driver it really is for returning to office. The other thing we're seeing is if you think about, if you look now at occupancy kind of in a typical week, there's sort of that, Tuesday, Wednesday, Thursday peak, and then Mondays and Fridays have kind of fallen off. And so what does that mean for employing a lot of people that are serving occupiers? What does that mean for food service and other services? But food is something that obviously spoils, et cetera. And so what we're seeing is, first of all, a lot more flexibility, really thinking about particularly those shoulder days and how do you still create a great experience, but you can't serve the same number of meals and sometimes in the same way. And so there's various sort of ways that we're doing that. Everything from, just specialty menus to programs, et cetera. The other thing that, we're just talking about technology. One of the ways that we've been able to try to predict more accurately the number of meals we have to serve is obviously when people are in the office. And although occupancy and access control is one aspect of it, people come and go. So it's still not incredibly correlated to the food meals. So what we've been doing is a lot more technology just on demand. Essentially, people are ordering ahead. So driving a lot of digital menus and things like that. I kind of think Uber Eats for the corporate environment. And so that's something that's been able to help us with being able to minimize waste. The other thing that we've, so there's a whole bunch of things. I could probably go on for a long time, and I won't. One of the trends that's kind of been interesting to me is particularly, I think, in some of our sectors, there's an aging workforce. Like think kind of the classic, maybe some of the classic tech sectors where everyone was pretty young and they're not anymore. So there's very deliberate menu changes are being made. So menus that are much more plant forward, trying to make sure that those same healthy choices are there for the employees. Because you asked about well-being, and it's very, very thoughtful and very deliberate with some of our executive chefs and some people that are managing our menus, even our test kitchens, is trying to develop great food but much healthier food. So a few trends there.
Right. I think that's really one of the things that hugely aligns with total value to the client, right? And health drives talent production. And so thinking through how you holistically deliver those services is so critical. And can you just expand a little bit, Steve, on that concept, right, of that destination workplace, of what other amenities are you guys thinking through? What's new? What is coming out that we haven't thought of before in addition to kind of food programs?
What's really coming out is it's a concept of think like secret shopper, right? Or think about a great hotel experience. Like I've just named a chief hospitality officer for our company, and that person has a really deep experience in fine hotels around the world, because I think that mindset of a great hotel, from the minute you pull up in an Uber and they're there to greet you, to reception, to the room cleanliness, to the food experience, everything working properly. I think age is still probably the biggest complaint in hotels. So we're really taking that holistic, curated experience for an employee and looking at it that way. So we're deploying think of secret shopper kind of methodologies to go through and just grade that entire experience. And so that's really, I think, the biggest trend that we're seeing, Ingrid, is thinking about it in that hospitality way. Because it only takes one or two of those experience that really can detract from all the other great work that's being done.
Steve had mentioned earlier that, he felt hybrid work, or what he was hearing from his clients was hybrid work was here to stay, although we've certainly seen a shift towards return to work. And you had mentioned recently in an interview, you were seeing also less of those discussions around hybrid work, and more the narrative is shifting and continuing to shift towards full return to work, certainly more heavily returning to work. Do you see flex space continuing to play a role in long-term portfolio strategy discussions with your clients?
I do see it playing a role, but I think that the larger trend of the moment is a more in-person culture. And I think that the reason for that is actually much more macro. So most businesses that we're talking to today are facing some of the macroeconomic challenges that we've talked about, tariffs, potential trade wars, changes in administration, but they're also facing a need to innovate their businesses very quickly. So across all categories that we're seeing, because of the changes with artificial intelligence, more and more companies need to figure out, how do I take what I used to deliver and deliver it more efficiently, right, as a business? And what we've seen across the board in every single industry segment is that business leaders really believe that that kind of innovation is better in person. So it's not that hybrid work doesn't have a role, right? I think actually, if you think about task-based work, sometimes being in a different location or a more quiet location could be extremely beneficial to having a more focused outcome. But what we've heard and seen from our clients is that if people aren't coming together and bonding, first of all, you're losing the culture. And like Steve said in his comments, culture is so important to drive business outcomes. But you're also missing that sometimes people can be going two different directions and not realize it, because they haven't really come together and reaffirmed, like, this is where we're going to go as a business. And so I think the role of in person is going to be here and be the more dominant story. And then flex will be, how do we fill that in to make sure that we keep the right talent and we keep the right labor and we keep the right people that are going to be able to drive our business.
Yeah, in a sense, and maybe we use different words, but prior to COVID, we did work in a hybrid way, right? We traveled a lot more. We were working on airplanes and hotels and in offices of our peers all across the world. And so I think we've maybe put more of a focus, and technology advancements have enabled us to track occupancy a little bit better. But I don't know that that's necessarily changed in the fact that we were always working in multiple different ways. And what you said around the reality is communication, being face to face, that is really important, and that drives culture, and that helps to build those aha moments within how business is done and how strategy is executed. And further to that point, so just kind of bringing it back up a little bit to where we had touched on earlier on the current market. Liz, this to you as well. In a recent interview, you also talked about how we were feeling perspectives of a strong economic market, and feeling that real estate was in a strong place. Over what has happened in the last couple of months, are you still taking the same position? What is the current volatility, economic uncertainty? How is that changing the way clients are approaching transactions? Are you seeing more caution, more optimism?
Yeah, I mean, in general, the last 90 days have created a bit of a slower movement forward than what we saw prior. And a lot of people are still just trying to understand what is the true impact of some of these changes overall. With that said, I don't think the sense of optimism has declined. So maybe the pace of wanting to make the decision, but most of our clients haven't adjusted dramatically their need from a square footage perspective or a talent perspective. It's generally the same. It's just that the pace of actually transacting and actually committing maybe a little bit slower. And I think that that goes back to what we've been talking about, over the course of this hour, which is business leaders. And I mentioned earlier, Ingrid, that I'm in Milken right now. And this is something that, KKR founders and others said yesterday, which is when business leaders are not sure, they just slow down a tiny bit, right? It's not that they're going to really deviate dramatically until there's a new set of facts, but they just slow down a tiny, tiny bit that they can make sure that they're making smart long-term decisions. Because, many decisions that we make from a real estate perspective are 7 years, 10 years, 15 years, they're long. So you're never going to have certainty over that period of time. We're used to dealing in a world of uncertainty in real estate. But with that said, getting those inputs really right at the start and starting off on the right foot is so important. Probably everyone on this panel has seen when you start off on the wrong foot, it's hard to correct. So I think people are taking a little bit of caution.
Todd, can you expand on that from your perspective? What's changed in how occupiers are managing transactions? Are you seeing longer decision cycles, more creative structuring? And, what advice would you give to occupiers who are really looking to remain nimble in today's market conditions?
Yeah, I think Liz hit on something key is our industry is really challenged when people stop making decisions, right? That happens, GFC, it happened in COVID. We're not seeing that now. We're seeing more caution. There is an underlying strong belief in the US and North American economy. There just is. We went into this in a very, very strong position. This is this tariff thing and kind of the chaos at the federal government is pretty self-inflicted. And I think a lot of the market and the economy is just waiting for us to get out of our own way and stop it. If it doesn't, and it triggers a real recession, a fundamental real recession, then it's gonna look more like a real correction. And I think everyone's hoping, mainly just because it is so self-inflicted, that we stop short of that. And so a lot of our clients are cautiously looking past it, slowing some decision makers, and it is a tale of what industry you're in, right? If you're an NGO or you're a government consulting company, you're in a structural resizing. If you're in a pure import business, you've stopped, right? And you're looking past, hopefully. If you are in the rest of the economy, you're probably playing for what it's going to look like past this period, assuming we don't trigger ourselves into just a fundamental structural recession. That being said, this happens in our industry. And, I'm finally getting old enough where I see that these aren't accidents. They kind of happen every 7 years. And for whatever reason, there are cycles, and there are cycles, there are economic cycles, and then they roll over into the real estate side. Real estate is a little more challenging because it's so expensive. It takes so much time to create. It takes long-term commitments. It's capital intensive, and it takes a long time to dispose of. So it's not a resource you can turn on and off. And that's the ultimate challenge, right, of our industry. Is the life cycle of corporate demand is much shorter than the life cycle of creating and disposing of real estate assets. So if you're talking about future proofing, which I think was in your question, you have to think a little bit more, I don't know, like a corporate treasurer. Like you have to be the shepherd of resources for the company. You're going to make commitments beyond whatever the immediate need is, right? And whether you're building a building or you're selling a building or you're doing a lease, these are kind of 10-year life cycle commitments. And sort of the life cycle of the space is about 10 years. Sort of making a decision to commit to something for a period of time that's probably going to outlive the immediate use, right? And that is something that is just the nature of what we do, right? So you constantly have to be thinking, okay, we're making a bet in this market, this sub-market, because we think it has a long-term utility for our business, right? And that's how, when I see people moving past the immediate decision-making, right? Because oftentimes the immediate circumstances can't give you a let's go or let's not go. You have to say, hey, are we going to be in this part of market or wherever you are in something like this use? If so, we make the commitment, we go with an eye towards how you might reposition it. You asked a question about flex that I wanted to come back to. If you think of flex as a shorter term requirement, shorter term commitment, there's a real place for that, right? There's a real place for that. If you think about where you go long and where you go short, we have seen that, not everybody's doing 100% enterprise flex deals because it's just too expensive, right? It is inefficient economically. But what you might do is you might do a core commitment in an area or market and then supplement it with flex. And that actually allows you to maybe downsize the core that you go long on, feel better about going longer on that. And again, going long could be building a building or buying a building. And then knowing the flex is something that helps you deal with peak demand. And I think that's something that provides a real utility to occupiers. And I think the space is not that much different, right? If you look at how we have to build out space now, think of just office use, it's not that much different, right? We have to build interesting utility space that multiple users can use and be in and out of and handle high traffic and is not terribly assigned. And, there's a way to future-proof, right? You have to think beyond the current need, but you have to justify it based on the current need. And that's kind of the tricky bit, right? It's how do you make a series of decisions that still make sense long-term?
Before we move on, Steve or Gordon, on that trend of market volatility, are you seeing anything with your clients or even the downstream supply chain that's being impacted based on what's going on today?
Yeah, I'll answer that first, Steve. We are seeing customers move capital investment decisions to the right. That is decisions being deferred for 6 months, say, or into next year. And that is impacting, obviously, a few things. Number one, in fact, impacting our labor to some extent, because you've built up a project delivery workforce and so on to be able to execute a certain volume, millions of dollars of capital, and that's getting pulled back and pushed to the right. That creates some challenges. So then you have to quickly redirect labor into other areas that create value for your business and your customers. So that's one area, and then the other area is just in terms of where they're going to decide on allocating capital, and where they might have thought of allocating capital to a certain part of their portfolio. They're now reflecting and saying, hey, maybe this isn't the best region to deploy capital. Maybe on a global business, or working across a number of countries and so on. So given the state of the economy and some of the administration's decisions, obviously people are rethinking, do I invest in Europe here, or should I be investing in the US and premises in the US? And so I think that dynamic for a global business is real, and obviously for business leaders like ourselves creates some short-term challenges.
Yeah, I would agree with everything that's been said. I think Gord hit on something that we're seeing as well, and that is with global clients just deciding whether to go long in the US or defer some of those decisions or rethink that. Particularly, working for a company that's based in Denmark, just trying to figure out the rapidly changing landscape, both economically and on the social issues. I'm having a lot more conversations internally and with clients that are global on just trying to understand, is this a kind of a short-term thing, or is this something more structural? And what do they do there as it relates to just, do they go long in the US, or do they hit the pause button and just wait till this whole thing there's more clarity on what to do? So that's the one thing that I would kind of double down on what Gord said and add that perspective.
Ingrid, one other thing that might be helpful in the macroeconomic before we move on is I do think that over the last several years, we've seen a really strong increase from occupiers wanting to understand what's happening with the landlord on their capital stack. What is the landlord's objective for their portfolio? What is their plan to sell that building, to finance that building? How are they really doing it? And I think that, Todd, you could probably echo a lot of the same here, that this feels like the volume on this topic has turned up pretty dramatically in the last 5 years. And I don't see this turning down in the future. I think this is going to be another core part of understanding, who are the right partners for you, right? So especially as the macroeconomic world is changing so much, understanding your own data is understanding your own solutions. It's finding the right service provider and partner to help you. But also, once you're out in the market looking for additional partners, whether that's landlords or technology partners to a certain degree, making sure, or flex providers, making sure that you have people who are aligned with what you're really trying to do. And I think that's become a really big part of what we do, creating solutions for our clients.
So that was a perfect unintended segue into what I wanted to talk about next. But before we do, we had a question from the audience that was related to this topic. So I thought I would just throw it out here now. And if anyone wants to respond, it's actually from the development side. But as developers looking for opportunities to deliver space 2 to 3 years out, our long-term lens is more focused on fundamentals and investment thesis for long-term investment. What themes do you see across asset product classes if you were agnostic? if you can truly be agnostic, of course.
Yeah, let me take a shot at that. And Liz kind of touched on this. What's happened in CBDs, central business districts in the United States, is a really rapid obsolescence of buildings. If you look at the buildings that are successful, anything built since kind of 2015 is doing well. Anything built before that is not. And it's almost that stark if you look at the data. And so what's happened is any of the older buildings have accelerated their obsolescence. And you hear a lot about repositioning buildings into industrial or into residential, whatever. But that's not just the obvious C building that doesn't have it. That's the A building from 2014 too, because there's been a flight to quality. Credit tenants are trading up; they can get more for their buck, and so the better buildings, it's really quite a healthy market. And so new constructions, while it's lagged, you have to segment the fundamentals. Fundamentals are for new quality product, and for new quality product, my guess would be is that they are fairly strong, just because that tap has been turned off for a while. And I think there is a repositioning or just a realization of what happens to the obsolescence. And there's an awful lot of capital being lost and ownership being traded. And there's a lot of broken bones in that kind of, central business district office that's not newer. And that's going to take real impact on cities. That's a real challenge. But it doesn't mean the whole sector's like that at all. And same thing on industrial. Industrial has been so hot, things have been gobbled up. There's actually a lot more sublease now because people sort of taken too much. But at the end of the day, anytime you have that prolonged period of stopping, industrial's had starts and the product comes to market faster. But you've had a prolonged period of no construction, that's going to create a pent-up demand in the future.
I wanted to shift a little bit, and I think all of you are service providers, but you're all coming at how you service your clients in different ways. And I think that gives you all a unique perspective into this next conversation. And so we're certainly, as advisors, seeing a shift from what I would call transactional vendor relationships to those that are more long-term and strategic partnerships. And I'm curious on your perspectives of what does it really take to move up that value chain? What should clients be expecting from, really a best-in-class service provider? And how are you evolving each individually your own models to meet those expectations? So I'll let you decide how you jump in and respond to that, but I'd love to hear from each of you on that topic.
I can jump in first and just say that long-term relationships are really founded on trust and transparency. And you earn that right to have that long-term relationship every day by virtue of bringing value to your customer, bringing them to a place with knowledge that they otherwise don't have internally, and really contributing to their success. And so ultimately, that's what tends to drive this idea of being a strategic partner. And, I've got this simple bar graph I use. On one axis, I have strategic and level from tactical to strategic. On the other, I have low to high innovation. And up the middle, your line there basically is the indication of the amount of value you're bringing. So, and you can only get to that strategic partner if you're actually bringing some innovation. And as you continue to bring more and more innovation, the customer becomes more of a strategic partner. And so it's this iteration of innovation, value creation, strategic right to be more of a strategic partner, and you work your way up this value chain to the point where over the long term you have a very successful relationship where you are difficult to unseat, frankly. And I think it's that collaboration ultimately creates that long-term relationship and that strong desire to continue to innovate, and frankly that desire to move away. Hey, this is just a contractual relationship and I'm only going to deliver what you're asking me for, versus this is a partnership and I'm going to constantly be looking for opportunities to introduce greater value to you. And again, we talked about the 3 value drivers: enhancing your brand and image, helping you from a financial performance perspective, or mitigating some form of risk for you. And I think organizations, they may not start a relationship thinking that way, But when you operate that way and you conduct yourself and team members within your organization conduct themselves in that manner, then you've got, I think, the makings for long-term relationships. So again, and that's really cultural. And I think that starts with all of us as leaders. Create that culture within your organization whereby you can innovate and you can be a strategic partner to your customers.
Absolutely. I agree completely with everything you just said, Gordon. I think when you think about what a transaction is, I think of something that's following a direction of a client purely. So, as an example, I need 10,000 feet in Austin or whatever it may be. It's a directive, right? And that's a transaction. And by the way, there's a place for transactions in our business. Absolutely. There's sometimes where you just need to get that a transaction complete. But moving into what a real strategic partner is it's someone who aligns with your overall business values, your business outcomes, and what you're trying to run as a business. And so instead of just saying, yes, I'll go complete that, transaction that you asked me to, it's someone who really comes and says, with a trusting relationship, hey, I'm wondering, like, why do you think that's the right labor pool for you? Does that matter? Hey, your data says that people aren't actually going into the office 5 days a week, they're going 3. Do you need 10,000 feet or is it really 7? Like, and has these kind of questions that are really up leveling the decision making at every single point of the process through the completion of whatever that transaction may be, but also the management of the overall portfolio across multiple different, dimensions in time and space and geography.
To echo that, I think a really great partnership, you make your client better. You make them better. You raise their profile inside the organization. You make them more effective. And that means that you're not always thinking about just doing. You're doing transactions, just doing. If you wait, just do what you're told, you'll put yourself very, very far down the food chain, right? So doing what you're told is table stakes. The real thing is and this is hard enough stuff. What are the real challenges? What are the unmet needs? What are you seeing? What can we do to help you think through that? And as you move up, work gets more interesting, you get more creative solutions, and they're based on actual real world scenarios. So the clients have to let you in to do that, but you also have to earn the right to be in to do that, right? By helping them address their core needs. And really healthy partnerships do that. And they do that, year after year.
Yeah, I think one other thing to add on that too, Todd, is like a truly great partnership is able to drive corporate strategy repeatably, scalability globally, but then also bring in that beat on the street thing that real estate really helps drive transactions. Is the loan coming due?
Yeah.
What happened to the building across the street? Is it an obsolete asset? Is it not? And figuring out how do you go really high on strategy, but also very, very low. And I'm
Right.
sure that you are doing the same as we are, which is trying to figure out how do we connect this across the org to make sure that we're really driving the right solutions. Because you don't want to overlook that there's a loan coming due on your building while you're focusing on that large, repeatable, scalable approach, but you definitely don't want to do the opposite either.
I agree with everything that's been said. I think from our perspective, it's slightly different, I think, than some of the other panelists, because we've got a lot of people on site, et cetera. So it's kind of an ongoing dialogue. I agree that, I think Gordon said that earned trust is obviously super important, but also just having that ongoing dialogue and being very candid with one another. This is working well for us. This is not working well for us. This is what I see as improvement. Having the ability to and the permission to have those conversations, just like any healthy relationship, kind of ongoing, honest communication and feedback is super important as a super first service provider. And if we can get that develops trust, et cetera, and I think you've got the basis of a really healthy relationship. And when that breaks down, that's really when things fall apart.
I actually think that's the most critical and likely the most difficult thing to achieve. And so when we think about pure expertise and capability to deliver, every firm that's sitting on this panel today has those capabilities, right? You're capable of delivering the services. When it comes to, and we sit these deals every day. What I see time and time again, when it comes to aligning cultures and finding the right talent that fits with a specific client. And that doesn't mean it's not good talent, and that talent would be great with client X, but they will fail with client Y. How do you figure that out? Far more complicated actually than delivering of the expertise. And I think we see that time and time again. And so the combination of being able to mirror the culture fit, the right communicational alignment with the expertise is really what enables you to have that partnership. So looking ahead to 2026 and beyond, what are you guys seeing? What are you looking forward to? What will separate leaders in corporate real estate and facilities management from their peers? Todd, do you want to start?
Yeah, I think the job's gotten a lot harder, right? If you think of the inside corporate real estate or facilities or whatever the department's called, I think it's gotten a lot harder. I think it's interesting to see people come at it from different parts of corporates now. The things I see that are high success factors are interpersonal business understanding, listening to and understanding the needs of business and thinking a little bit further into the business. And so business partnering skills, right? To be seen as a value-added business partner inside companies is huge. And that's not easy, but you know when you've got it because you're taking places, the doors open for you inside the organization to be able to do bigger and better things for the company. So I think there's that kind of EQ, IQ. Then I think financial acumen. And financial acumen cycles between how you think about use of capital, how you think about expense, and how you evaluate decisions. And it's really interesting because a lot of these decisions the CFO knows about, right? They know where the capital's buried in the company. They know when a new lease comes up and you have to pay for half the TI and that comes up as an approval. You know, some of the stuff hits very high because these are long-term commitments and use of precious resources, capital. And then it hits the occupiers and income, right, in expense. And you have to be able to cycle those things to be able to talk about those because you can get stuck in one. You know, oh, this is just about saving a nickel, right? A nickel per square foot might not be the right decision when you're talking about, enabling a very expensive process or something like that. So understanding the business process, trying to figure out the unmet need, and then enough financial acumen to be able to know and suggest what the right metrics are for that evaluating whatever it is, owning a building, keeping a building, expanding it, moving, whatever is really key. So not easy to do. There's a lot of resources with partners like us, and there's a lot you can do. And I love the idea of a healthy relationship. The thing is you have in any relationship, you can go to your partner and say, this has been great, but how about a refresh? Or let's take another look. Or how about that is very, very fair game. You can get stuck in these long relationships and just sort of get stuck in patterns. And the nice thing about companies like us is we're big. We can do a lot of things. We can restaff, we can rejigger, we can do stuff. And every now and then having that healthy discussion to say, hey, what should we do different is fair game. And it's kind of a tool to keep things, fresh.
Yeah, I mean, similar to a marriage, right? They have to constantly be reinvented, these relationships, and constantly, right, looking at how do we continue to iterate and to change. There was a question from the audience that is very aligned to this discussion, and maybe one of you can touch on it as you respond. How do we help corporate real estate executives communicate real estate concepts internally to their business partners? And I think that it sounds maybe a bit obvious, but this is a real challenge, and we see it all the time of developing that appropriate business case of selling, like you just said, is it not just about cost savings, but what is the total value proposition? And how are you guys doing that in supporting your clients?
I can jump into that a little bit. I'll bring it back to the beginning, actually, if you don't mind. And that's, I think you first need to answer this value question that we talked about at the beginning. So what's happening? I don't think there's one size fits all. What's happening with that client's business cycle? What are they seeing as value, right? And like, someone said, Todd, sometimes it's cost, sometimes it's employee retention, et cetera. So I think we tend to, in the real estate world, I think there's a habit to kind of go right to cost per square foot, cost per employee, et cetera. And I think communicating the value, I think, is really important to open up that aperture and with that value lens and say, doing the employee satisfaction, looking at retention trends, et cetera. So partnering with other colleagues, the P&C partners, et cetera, and communicating that in a much more holistic way, I think is a very effective way to do that.
I would, Ingrid, just like to say that when we look at any organization that ultimately is successful over time and endures, economic cycles and trends and so on that may occur within any industry. I think these organizations have found a way to evolve quickly, and ultimately they possess a very, very strong mission. And they're constantly focused on what the societal changes are. And frankly, the societal purpose for which the business exists. And when you do that, when you're a mission-driven organization, you are in a position to engage your team members more readily, ultimately, as well as your supplier partners. And that has to be done through effective communications of many kinds. But when you engage your supplier partners, when you're engaging your team members differently at a heightened level, if you will, you're actually going to retain those team members because they feel like they're part of something that goes beyond just a paycheck. And when you can do that effectively, you're going to have the best people because the best people want to work for the best organizations. And through time, ultimately, the best organizations have been those organizations that have served society in a meaningful way. So, at BGIS, for instance, we're laser focused on creating the healthiest indoor spaces. We're launching Blue Zone buildings. We've been doing that for the last few years with this societal need to be one of driving greater health and wellness, but ultimately greater productivity. And we need that productivity so that we can compete globally, so that our nations, we happen to operate in all of the allied countries, major allied countries around the world. And if we can create very productive and economically prosperous nations, we're going to be, as an organization, obviously very successful, but we're going to create better futures for all of our children and grandchildren. And I think at the end of the day, when you can connect the dots to what cares, I really think it's important as business leaders that we're engaging our people so that they feel like they can contribute to something bigger and greater and have that mission-driven purpose. And when they do that, then ultimately you're going to find that your organization is going to be very successful.
We just have a few minutes left. I'd love to hear 30 seconds parting words from each of you. So Liz, why don't you start?
Absolutely. Well, first of all, it's been great to be with all of you today, but I did want to finish off. I know Todd was talking about some really important things that our clients are looking for in 2026. And I want to also add on top of that, really, that I think that the importance, in addition to having a nimble partner and someone with financial acumen, the importance of data in today's world and data integration and analysis, and really using that as a predictive tool to drive different scenarios for your business. So I think that's going to be a really big one to watch. And I bet everyone on this panel will have many different things to say a year from now as this unfolds in our industry.
Yeah, I think it's an exciting time. It's not easy, but it really is an exciting time. Post-pandemic, we learned a lot about the nature of the requirement. I think companies, I think the value of real estate and place and space has gone up in an organization. I don't think it's the commodity it once was. I think it is an enabler of work, whether it's access to talent or it's driving productivity or it's access to markets. And that's a great place to be. Now, once you're there, it's pretty challenging, right? The market's business decision-making is very hard. And like I said, we're stuck in this immobile asset. But I think it's a fascinating time for us. I don't think it's going to get a lot easier. I think data is key. I think taking a page out of retail data is really interesting. Retail pulls a ton of data in. And I think that, and you couple that with AI's ability to digest and show trends in data, could open up a whole new dimension for us as we supply and demand match and scenario plan. So I think it's going to be an exciting time.
Thank you. Okay, we're almost out of time. Steve, 10 seconds.
10
Thank
seconds.
you.
Great to see everyone. Agree with Todd. Super exciting. Think hospitality in the workplace.
Thank you. Well, thank you all for joining us today. And really a special thank you to each of you. I really appreciate you being here and sharing your insights with us. And we hope the conversation offered some great takeaways to the audience as well. So thank you all.
Thanks, everybody.
Thank
Bye-bye.
you.
Thank
Bye
you.
now.